everybody, this is John. Welcome to the free video. And what a violent intraday. This weekly chart, it doesn't do justice to today, but at the same time, it keeps it in perspective. And the theme continues to be the same. On a daily chart, we are in a downward channel, and on a weekly chart, we're in an upward channel, and that means we have volatility. And why do we have volatility? Because there's essentially two different forces at work here. You can see within the context of this daily downtrend, today's move was nothing, okay? From a weekly perspective, it's like, oh, okay, that was, not too big of a deal. But of course, today was actually very violent and very volatile. But the main thing is, looking at this, is that, we do have this range between about 105 to the upside and about 98 to the downside. And, that's just a downward channel that we're in. And at this point, there are definitely forces at work trying to keep us in that. Now, if we dive in here and we look at the 30-minute chart and kind of take a look at the intraday stuff, you can see, it was a super violent day. We came up here, actually took out the highs a little bit, sucked in all kinds of cash, like, woohoo, it's off and running, and just destroyed it, okay? Now, a lot of times people ask, like, oh, why did it happen? Why did it happen? It's really not that important. I know that's a shocking thing to say, but realize that all these asset classes are intermixed here. And the real thing that's going on here is that the yen futures keep going higher, okay? And they actually broke out today, and once this happened, they took out the highs. That's when the market essentially just nosedived. And the ticks today were just amazing on the downside. They were very violent. So now if we look at a daily chart of the Qs, the question is like, what's going on here? And, after today's action, I'm fine buying puts here. In fact, I texted this out when let's go back to a 30-minute chart, show you exactly what I did. Once it broke here, okay, it broke here, and then once it rallied back up, and actually this is easier to see like on a 5-minute chart, once we rallied back up here, I bought puts. I got the 104 puts that expire next week with the idea that, hey, this thing might be able to come down, at least test this level, okay, the 101, 141. If not, there's a level below that, 99.38. And it's a hedge against some longs and things like that, okay? All right, so that's that. The one main play that we added today was Amazon spiked up today into 300, and that was a great place to sell an at-the-money call credit spread. You got a squeeze to the downside, and it popped up like that, so we texted that out, and that was good. And then in terms of just kind of the major assets, oil here, everybody's excited today because it bottomed. Are you kidding me? The low today was 44.20. It did have a nice close, but that's not what I would call a bottom. It's a lot of words for that, but it's not, a bottom doesn't come to mind. And then TLT here and bonds continue to be very, very strong here. So what kind of stocks here? If you're worried about the market is rolling over and dying, but you don't like to short in this market, okay, because why? Because the weekly trend is higher, but the daily trend is lower, and there's a lot of volatility, as it can be seen here from the VIX, if I can type that in correctly. What do you want to do here? And really, it just comes down to what stocks here don't care. And believe it or not, Buffalo Wild Wings does not care what this market is doing, okay? And I actually love the volume here is perfect. It's a lower volume stock. This is a good day of volume, and it was 500,000 shares. Not one tick to the downside today, okay? So that's the kind of stuff here where, restaurant stocks, for whatever reason, money is pouring into it. Well, I say for whatever reason, but think about this. Oil's gotten crushed. The price at the pump has dropped. It's putting an extra $150 a month into the average consumer's pocket who lives paycheck to paycheck and isn't going to save that money. If you got an extra $150 a month, what are you going to do? You're going to go eat at a restaurant. That's the first thing that people do. This is a proven thing. I'm not like, oh, this is a theory I'm extrapolating. The first thing people do when they have extra income is they go out to eat. And you're seeing Buffalo Wild Wings, Texas Roadhouse, Domino's Pizza, Papa John's Pizza, they're all going higher, and they don't care what the market is doing. So if you're interested in the long side of this market and don't want to worry about the volatility, then you can buy calls and sell puts on these restaurant stocks, all right? Hope that helps. Got a lot to cover in the premium video tonight. You guys have a great night, and we'll see you at the next update.